So if you've been sitting there thinking, I wonder what my business is actually worth, follow my video and let's explain business valuations. Hi, I'm Michael from MDH, your accountants and business growth advisors. If you like this video, click the bell and subscribe to make sure you don't miss out on any of our weekly tips and tricks. Have you ever sat there and wondered, what is my business actually worth? Or you might be in a dispute with another shareholder thinking, I wonder what this will value for. If you're interested in this, follow my video and I'll explain more. Reasons why you may need a business valuation. Number one is you're looking to sell your business. All the hard work, the graft and all of the adventure that you've been on, you're looking to cash in on your capital so you can go and enjoy your money. Two, these are normally negative situations. It could be that you're getting divorced and you need a valuation because you're divvying up your estate so you can split it in whatever way you agree. Number three could be that you've passed away, unfortunately. And as you've passed away, this will be divvied up between your family or whoever you decide to leave your company for, and this will need to be valued. In the past, there was full tax relief on trading companies, but now there's potentially tax rules that are coming in where you're going to need a valuation for inheritance tax purposes. This is a big one that's coming up very, very soon. Bear in mind though, that if you've got an investment company, these will need to be valued all of the time because they don't get business property relief. Other areas where you may need a valuation could be a management buyout or a management buy-in. There could be a load of other factors. So it's a really good idea to have an idea of what businesses like yours sell in the market and also the quality. And the quality is the major part. So you can then really understand what your business is worth. So when it comes to actually getting that valuation, you don't get any nasty surprises. There are loads of different ways that you can value a business. Ultimately, it's determined to what someone will pay for it. Now, if you're using a valuation for a different reason, you'll be able to use industry metrics that have happened before in the past, and you'll use them metrics to value your company. Now, there are loads of different ways you can value a company. What's really important to get full understanding with now is different industries value businesses in different ways. Let me give you an example of the accounting industry. Up to £1 million turnover, an accountancy business is valued on a revenue multiplier. When you get above £1 million turnover, it's valued on an EBITDA calculation. Oh, what are they, Michael? Let me explain a bit more. A revenue multiplier is what it says in the name. So you look at your turnover, which is excluding VAT, and you'll do that a certain multiple. It could be 0.7, 0.8, it could even be 1.5, or it could be a lot more. What you tend to find with revenue multipliers, these will be really hot in certain industries. One industry where a revenue multiplier is really hot is a SaaS-based company, which is software as a service. You take their annual recurring revenue and you times it by a number. It could be anywhere between 8 and 20, depending on how sexy the business is, the growth potential, and how desperately someone wants to buy it if it's in a bidding war. What you tend to find in sort of like our industry, you have a revenue multiplier, which standard was 1 times a gross recurring fee. And that's been the way ever since that I've been in practice. So one way to value a business is a revenue multiplier. Another way to calculate a value of a company is a return on investment calculation. Now this is what it says on the tin. Someone pays a chunk of money for the business and they'll want to make sure that the value at the end of it is worth more. And if you do a calculation to work out what the internal rate of return is, that basically means interest upon interest upon interest upon interest. What return have they actually got through purchases in your company? And is that weighted as well? So the additional risk that you have in buying a company has produced a bigger return at the end. I find this the most easiest to get my own head round, because if you're going to buy a company, you want to get benefits out of it from integrations and also getting there quicker, but you also want to make a lot more dough, because otherwise what's the point of taking on the extra risk if you're not going to get that reward? You might as well leave it in a low risk investment. Another way to value is cash flow valuation. Now, we've all heard the quotation, turnover is vanity, profit is sanity, but overall cash is king. So what you can do as well, you can look at the actual free cash flows that come out of the business and what cash it actually produce to actually produce a valuation depending on how much cash the business is doing. To me, this is very similar to the return on investment calculation, because you're looking at how much extra you're getting back. But if you've got really positive, strong cash flows that are coming out of a business, This is really sexy because that will either give you an opportunity to either fund down debt if you decided to purchase the company using debt, or you can use it to then double down on your investment and invest heavier in the company. A lot of us know if you invest in the right areas in your business and they're sound decisions, investing in extra cash flows will normally result into making more money. Now, don't forget, there's going to be another video coming up with business valuations number 2. So keep an eye out on your email or on your feed on YouTube to make sure you don't miss out on this. To give that an extra chance, click the bell to subscribe, and then that way you'll be notified when this video comes up. Now, I hope this video has really helped, but if there's any questions that is burned from you and you need a quick chat, click on my link below. This will allow you to book a video call in with me for half an hour. I'll take on board any questions you've got, I'll get to understand you, and I promise there'll be no pushy sales pitch. Now, if you're also looking to increase your business at the minute and grow, we have our business growth program. So click the link below. It's 12 sessions where we talk about exactly all of the key ways to grow a business. We'd love to see you on that course today. Please click the link below.